Welcome to Power Charting. My name is Bruce Fraser, and I'm your host. This is episode number 11, which we recorded on October 9th of 2018 to be aired on October 12th of 2018. And I am here with my co-host, Roman Bogomazov. Welcome.
Hi, Bruce. Happy to be here.
We are going to change gears a little bit and have look at some sort of new approaches to the market today. But first, let us remind you that we have two important things coming up. We have an October special, which is projecting point and figure price targets across multiple time frames. And we have already had episode 1 of 3 sessions, and these are all recorded, so you can go back and review them over and over and over. Now, if you've missed the first episode, there's still an opportunity to jump in and join us, because if you subscribe and join our program, you can review episode 1 and then join us live or recorded for episode 2, which will be on Thursday. So please check this out, because we don't do this very often. And Wyckoff horizontal point and figure analysis is just some of the most interesting and useful technical analysis studies that are out there. The other thing that we do is on Wednesdays, we do the Wyckoff market discussions. And this is last bar analysis of the markets. It's a very detailed approach to studying markets. And we look at the current conditions every week and then update those and then bring in interesting studies as we go. We have a special offer, an opportunity for people who have never checked out the Wyckoff market discussion before to come in and join us for one episode and see what we're all about. And so if you join us at Wyckoff Associates by sending an email so wyckoff@gmail.com, and let us know that you're interested in attending a Wyckoff market discussion. We will include you in a upcoming future session. So again, this is an offer for people who have never attended a Wyckoff market discussion before and would like to see what we're all about. Roman, any thoughts?
I would say just one thing. If you really like what we do with Bruce here on the Power Charting, then you will definitely like Wyckoff market discussion. So I would definitely recommend checking out, this free one session that we offer at this point and see what it's all about.
Also, do take time to go to wyckoffanalytics.com, which is a wonderful website with a lot of content. And this is Roman's website, and the offers and the opportunity to join in on the point and figure project that we're doing currently, and other classes are all being offered at that website. And then also come and check out my blog, which is the Wyckoff Power Charting blog, which is at Stock Charts, and see what we're up to there. So Roman, we better get to work. So we're going to do an interesting thing today. We're going to look at relative rotation graphs as a way to identify candidates that we can study in a Wyckoffian methodology. Here, we encourage you to go to the chart school and then read about the relative rotation graphs and see what they're all about. I believe personally that relative rotation graphs are one of the most exciting visualizations of the stock market in a technical analysis methodology that I've seen come along in the last, say, 20, 25 years. And I'm very intrigued with them. I'm very much a top-down sector industry group stock kind of person. And so this really is in my wheelhouse, and I really enjoy looking at it. So we're going to take a few minutes and see what relative rotation is all about. You can see these quadrants here. And so what effectively is happening is that you go, let's say in the bottom right corner, you're looking at the groups that have been lagging, they're weakening. And so these are groups that went from a strong position or weakening into an underperforming state. And then from there, they go from weakening to lagging. And so you can see in the case of, say, the blue chart, which is XLP, you can see it's gone from weakening to lagging to now it's gone up into the improving quadrant, and now may go into a trajectory into the leading quadrant. And so it gives us a clue about the future direction of industry groups, sectors, and so on. And you can put your own symbols in these lists and compare the symbols that you want to, and then also there's predefined symbols. So anyway, predefined lists. So let's move on. And Ramon, any thoughts before we
I think it was perfect, Bruce. Let's just go to the next slide.
And so what we're going to do today is we are looking at the sectors. And so these are this is a sector list that encompasses virtually all of the important stocks in the stock market in their appropriate sectors. And we're going to look at one sector here, but you can see that as an example, I just wrote a blog on the healthcare sector. And you can see in the top right corner in the leading, there's basically one sector that's leading right now, and that is healthcare. And so healthcare, you can see, is all the way over to the right-hand side of this its quadrant, and it's starting to tilt down. Now, it's still leading, but it's starting to tilt down as though it's getting ready to slow, and it can't get any more to the right. I mean, it's definitely the class sector at this time of the ones that we are looking at. I actually, in my blog, wrote and studied the point and figure analysis of the healthcare sector, and was showing that an important point and figure objective has just been reached, and it's in the zone of that. It could continue to go higher because it has good momentum, but it's sort of in the zone where it's fulfilled an important count, and that may be the reason that it's tilting down here. Ramon, any thoughts?
Yeah, absolutely. So when we look at this visualization, I think the key concept for me here is the improvement of an instrument. In this case, these are sectors that we are looking at. So how do we see the improvement for the last, let's say, 5 weeks on this chart? We want to see the movement through the quadrant. So we're seeing, for instance, with the energy, that even though the sector is in the lagging quadrant, it still is improving, and it's going up, and hopefully it's going to go into the improving quadrant, the next quadrant right here. And we could identify sectors like this. Today, our interest is in the sector that is in the improving quadrant, and it has been going up and to the right and trying to go into the leading quadrant. And to me, Bruce, that's probably the most useful aspect of this tool, just to identify the sectors that are rotating. So you are seeing the visualization of the rotation itself.
Very good. Well, do take some time to study relative rotation graphs. It's a very exciting new visualization of the market. Julius de Campenauer writes a blog at stockcharts.com. You should go read his blog. He's created a wonderful thing here, and you can play with it, put your own charts in it, change the benchmark to others that might be of interest to you, and just see how you might be able to use this tool. So let's move on.
Let's look at the industrial, right? Because we want to identify a specific sector that we want to look.
Sure. So we can see over here that the XLI, the industrial sector, has a really good trajectory as it's moving to the right and is attempting to go from improving to leading. And so looks to me like it's the best candidate to become a leading sector among all the sectors that are in this graph. And so let's just go right in and zoom into the industrial sector. You can see here that in the last week, the industrial sector has been one of the top performing sectors that's been available. And so you can see healthcare, which is, to the far right, is really strong. The energy sector is trying to go into the improving quadrant. And so let's go in and drill into the industrial sector and look at the themes that are in that sector. So these are the industry group components that make up the industrial sector. And we're going to look at, this is the performance for the last week. And we are going to look at waste and disposal services. And so let's, Ramon, before we move on, any thoughts?
Obviously, there are quite a few things that we could go through here in terms of which group we would be looking at. One of the things that I do personally, and I know that Bruce does the same, when you look at the list of groups or the list of the stocks in the group, what you want to identify two things: your top stocks or top groups. So for instance, the top 4, you want to look at all of the charts of those groups. And then you also, and it's not being shown here, it would be shown on the relative rotation graphs really well. You could insert, the symbols of the group into the RRG and then look at the rotation. And I think that the rotation is heavily underlooked, by the retail traders. Usually retail traders look at the top of the group, the leading stocks in that group. But think about this. The leading stocks or the leading groups, they most likely will be in some kind of uptrending environment. So when you look at the leadership there, you kind of have to find, a correct structural point of entry. When you look at the rotation, then structure matters less. And then we could see that there is a big push, a momentum push to get into a specific instrument on the rotational pattern. So just kind of like two ways of approaching it.
Terrific. I am constantly using these lists to drill in and look at, my pattern is go from sectors to industry groups to stocks. And I try to always organize my thinking around the market from that perspective. And so this is very consistent with the way that I drill in to the individual stocks from the sector level.
So let's look at the waste and disposal.
Sure.
And the first thing that we should really do is just to look at the chart of the group. Bruce?
Well, and in this case, you can see where this leadership is coming from, because here's a daily chart, big rally trend up into a climactic condition, and then an automatic reaction that comes in early February. And this sets up a range-bound condition, which actually produces an important reaccumulation structure, which suggests to us that large informed interests, we often call them the composite operator, collectively are accumulating this industry group. And so we can see that after the low was made in early February, that even after a rally into So we have an automatic reaction, and then we have a rally up. It comes back down again for a test. So we have a couple of different tests taking place, but really at the end of April or beginning of May, we have an important test of the support area. And then this is a higher low. And so that sets up an important rally, and waste and disposal becomes effectively becomes good leadership by making higher highs and higher lows throughout. Roman?
Yeah, so let me just do this. One of the things that we could see here from the chart as we go through the price and volume analysis, there is a lot of buying in this area right here. So a lot of institutional buying that we see just based on the volume signature. And look how the volume signature is going down into the area that Bruce has mentioned as a high or low. So we have a little bit of a sprint situation right here. This rally right here has that change of character type of behavior where there is some buying behind it. And then after that, look at how dull and somewhat quiet, relatively quiet, the next formation is. And it's a very interesting formation because it has this upsloping structure to it. There is a really good rally before the breakout rally, and it has the consistent demand behind it, and it makes a high, so that's an element of strength. And the previous rally also makes a higher high. So within this smaller structure, there is a lot of strength. And then obviously a jump out, a breakout. So we see that there is a lot of interest from institutions in this breakout. And more importantly, the price commits above the resistance, and the test that is currently happening has a form of the trading range. Bruce?
I love the way after the May low, there's these really good lift off, good rally, good volume, but notice the backing up action that occurs after that. This is important. Look at how little volume there is on that backup in mid-May. And then also look at how little volume there is in late July on that backup. And so this really, in my mind, shows that this is a group that's being aggressively accumulated by large interests. And the character change in this rally is so different from what preceded it from February to May. And then what occurred from May on, I think really just is a real tell that institutions really want to own this group.
Mm-hmm. One more thing about this chart, Bruce. It's on the right side from August to October. We see that initial change of character on the breakout rally comes as 1 bar. So that's a very interesting way to set up the range. So that tells us that there is some sell-in here, which could be just a profit taken at this point of time. And then there is some strength on the rally that overcomes the resistance point, again, higher high. And then we are going down, and there is only 1 day where we're seeing some kind of sell-in coming in above the resistance. And after that, the volume signature is very, very low and kind of like going down. And with that, the price travels down, but only for 1 day. It commits down as a sprint, and then the next 3 days are just really, really great.
And a really nice touch of that prior resistance area, which now is support. So this is a very interesting place in this group.
Okay. Well, once we looked at the group chart, we really would like to go down to the stock level. So let's look at stocks.
And of course, what we want to do when we go to the individual stocks from the group is we want to identify the important leadership names. And so in this particular case, what we do is we are looking at the 2 largest cap names in the group, and you do that by clicking on the U, and this will organize the stocks large cap to small cap. And so the top 2 names, we want to see, they will dominate the industrial or the industry group chart. And so we want to try to find the leadership in the large and the mid cap names and see what is leading. So we're looking at the 2 large cap components, which is Waste Management and Republic Services. So these are the 2 that we'll look at today. And they both had really good performance on that list. So in the case of waste management, you can see that there's a real family resemblance here to the industry group. And so there's an important big sign of weakness, automatic reaction in February, and then a rally. This actually, in some regards, is a little weaker than the industry group. And so you can see that at the May low, it makes a higher low, which is important. But at the late June low, it actually goes down and sort of springs that prior low. It's not a classic spring of the whole structure. You can see that there appears to be accumulation going on in this group, but I think that the place where you see the accumulation is nearing completion is look at the decline from the July peak, which is really below the midpoint of this big trading range. But look at how the volume dries up as it attempts to go back down to support and cannot get there. And so the response to that is look at that phenomenally good bar that takes it right up to resistance. And that is a huge change of character, which creates the momentum to take waste management up and out of the resistance area and puts it on a uptrend from there. Ramon, what are your thoughts?
Yeah, I really like the texture of this area right here. We kind of see that the reactions are becoming so shallow relative to what we've seen before in previous segments of this range. And as Bruce has mentioned, it happens on the background of the volume, diminishing volume signature. And this is a very beautiful bar, as Bruce has said, the change of character bar. Look at the volume signature behind it. So suddenly there were a lot of urgency to buy. And who's buying this? I mean, obviously, this type of volume signature could only be produced by big institutions. So when we look at the volume signature throughout the whole structure, we kind of could see that there was an opportunity for them to buy in the first segment of the trading range and then on the way out. So they're signaling the timing for when the structure of non-trending environment will be created. And then the second signal and timing for us is when the price will leave that formation. Bruce?
For your point and figure people, you can take from that low in July and you can count over to the weakness in early February and get an estimate for the potential in this reaccumulation area. And that is a large looking reaccumulation that might have good swing trading potential. The other thing that I really like here is that when it came back after it jumped out of the resistance area, notice that the volume is decidedly lower as it attempts to come back to support. And look at how the volume is drying up, which shows that there's just no supply available, and the CO has wrapped up much of the shares that are available for purchase. And then the response in the last three bars is pretty dynamic. It's like really good volume and good spread, good volume as it turns off of that support area and it starts to go up again. So again, this is an interesting place for this stock. I think it's interesting that waste management was weaker than the group and then caught up in such a hurry. So let's, Ramon, unless you have any other thoughts about this chart, let's move on.
Just one last thought here.
Sure.
Now, when we look at the group chart, we want to compare the stocks to the group chart. If you guys remember on the group chart, we had a change of character right after the breakout, and we had an increased volume signature on this. Here, we don't have that. So what does it tell us? It tells us that big institutions, the CO type institutions, they are unwilling to part with their position and to take even partial profits. And, you know, the volume confirmation here of this type of behavior kind of like is very persistent. And obviously, you know, within this whole structure here, which is just a different segment of the trading range, look at the rally in between these two reactions. And even though the last reaction has some kind of, you know, maybe bearish short-term interpretation. We don't see a lot of selling on this, so that just reassures us that when the price comes to the support, there might be some kind of lift off this support level, and it does exactly that.
Okay. So our last stock, Republic Services, notice the difference in the character between this stock, the industry group, and Waste Management. And you can see that there's a decidedly upward tilt here to this stock as it's being reaccumulated for another jump out, another move up. Now, we're using where Ramon has circled these points that the trend line is touched. This is a reverse use of trend lines where we're actually drawing the trend line over the tops in an uptrend. And you can see here that recently we've had a throw over in August and September of the area after a very long uptrend, and has since turned off of that. We'll notice the volume that's come in off of that throw over, and the volume is actually expanding a bit. So there's more active selling that's occurred in Republic Services as it's coming back off that trend line. Ramon, what are your thoughts in the time that we have left?
Well, let's continue with this thought. The supply has increased off the top, off the overbought, overthrown condition. But where does the selling stop on the price level? Look at here. And as we look at this jump above the resistance, we see that there is a lot of institutional volume signature here. So if the price will go into this area, this is where probably it will find support from those institutions. And we kind of see how the price is reacting off that low.
One thing that really stands out to me here is that notice how the Republic Services has corrected back to a minor support area. Look how far above its prior resistance, old resistance, new support it is right now. This is clearly a relative strength leader in this industry group. And these are the stocks that I'm generally attracted to, are the ones that want to light the way for the rest of the industry group. Ramon?
One other thing here, just on the texture of the whole formation. So we have a change of character coming into the trading range, and then look at the rally that we have to the higher high in the potential phase B. For those of you who are Wyckoffans and you understand our abbreviations here, that's an element of strength. But yet, the shakeout was very interesting. It took us to the lower low, kind of like in the middle of the range, and we see a lot of buying in this area as well, both on the way down and on the way up. And then this formation right here is all about the absorption of that supply that was available at the higher level that came on this bar. And we just require a little bit of time to go through this absorption, and then we're breaking out.
I see just generally that the volume is drying up from in April, May, June, as it's preparing to jump out. You can see that the volume is strong on the way up and it's contracting as it attempts to pull back. So, Ramon, we are just about done for today. Do email us if you're interested in joining us for a Wyckoff market discussion. We'd love to have you as a guest. And also look into our point and figure analysis. We'll see you next time.
Thank you, guys.